From the Lineweaver Wealth Watch Center, this is the Financial Quarterback.
I'm Jim Lineweaver, financial quarterback since 1993. Today we're going to discuss why now is a good time to reduce cash holdings and invest in fixed income. We think bonds could potentially produce returns in the 6 to 7% range or more. So to help explore this topic, I'm joined by Chad Roope, our Chief Investment Officer. So Chad, tell me more about this opportunity.
As you recall, the Federal Reserve increased interest rates really sharply and quickly from essentially 0 to over 5% between 2021 and 2023. They did this because inflation increased rapidly to over 9% after the COVID lockdowns. This led to some of the worst bond market performance in decades, with 2022 being the worst performance for the bond market on record. We think this has created opportunity for investors.
Yeah, and now that inflation has cooled significantly from its peak, the Federal Reserve has cut interest rates and is likely to keep them steady for the next several months. So in this environment, we think bonds are likely to offer better returns than CDs and money market accounts.
And we have access to many fixed income managers that have tons of flexibility with the types of bonds that they can trade. And many of their funds have yields pushing 6% right now, with the potential for price appreciation in addition to that.
Yeah, we've not seen these type of yields in a few decades, and we think now is the time to take advantage of them. So Chad, we can also get compelling income in the municipal market too. So tell us more about that for high income earners who really need tax advantaged investing.
Yeah, that's right. We can get investors access to really high quality Ohio municipal bonds that are free from federal and state taxes with tax equivalent yields in the 5.5% range right now for 2028 paper. You know, I really think now is a great time for high income earners to step out of taxable savings accounts, CDs, and money market accounts and invest in shorter dated tax-free Ohio municipal bonds.
In our view, people who fall into the 32% tax bracket or above, and let's say you're married filing jointly, that's about $400,000 of income. So it would put you in a better tax position to be in Ohio municipal bonds, which are triple tax-free, meaning there's no tax on the local, state, or federal taxes. So going back to the CD we talked about earlier, you may think you're getting 4%, but after you pay the taxes on those earnings at the 32% bracket, your return is actually only about 2.72%.
We also offer other interesting strategies for cash, such as buffered ETFs that get tax-advantaged exposure to the U.S. stock market while hedging away downside risk. If you have cash sitting on the sidelines and need help taking advantage of these types of investment opportunities, reach out to us today. We'll arrange a no-cost obligation meeting. One of our seasoned financial advisors can help you determine which strategy could be best for you.
And finally, keep in mind, financial strategies aren't one size fits all. What suits your neighbor may not align with your needs. At Lineweaver Financial Group, we take a holistic approach, tailoring a plan specifically for you. So call us today to schedule your consultation. We're always here to help. Here's Fox News Sunday.